Full swing with big banks earnings coming in the morning. Tech results are going to ramp up next week, starting with Netflix on Wednesday. Let's bring in Mark Mahaney right now from Evercore ISI. He just published a note with a new top large cap pick. Mark, tell me about it. So Amazon is up about 58% year to date. Uber is up 86%. Is that why you think Amazon has more room to run from here?
Well, okay, if I'm going to step back, we're now called, we started the year being tactically constructive. We're now totally tactically constructive. Sorry, that's what we're saying, John. So, look, we've had a recent pullback in the sector for a variety of reasons, mostly related to macro and markets, rates particularly. I think that's created a kind of a little bit of a fatter pitch for some of these names. We got fundamentals that are improving in the back half of the year. A good number of these names are going to have accelerating revenue growth and then margin expansion with multiples reduced. And those two factors there, generally stocks work well. I like Amazon here because it pulled in 15% just in the last month and a half off a variety of concerns that I think are overstated. And one of those concerns is that AWS is just not recovering its growth. The channel checks we do suggest that growth is recovering. Whether they beat the bar this quarter or not, it's hard to know. But in the next 1, 2, 3 quarters, you're going to see a reacceleration in part because of these generative AI workloads. Other issues at Amazon, the stock is facing concerns over Temu and Shein and Chinese fast fashion, fast retailers. And I think there's a mistake going on here. I think if you look at the cross visitation analysis, I think there's much less overlap between Amazon and those companies than there is with a series of other retailers. And then I think margins are going to continue. We think margins are going to continue to recover in the retail business. So we like the fundamental setup and the valuation setup on Amazon, number one pick.
Okay, so let's center this on Amazon since they got almost all the businesses that we want to talk about. Is Amazon going to move more on AI or on the retail business in Q4? And to the degree that AI is a mover for the stock, how much headline risk is there if people get excited about Microsoft or, well, particularly Microsoft?
I'm going to change your question just a little bit. I think it's going to move on AWS and then on retail. And then AI is just kind of part of the thesis in this name because AI is the workloads associated with generative AI. That's what's going to start powering this reacceleration, or one of the factors that leads to this reacceleration in AWS growth. But yeah, the AWS has been the number one reason why the stock is over the last kind of year and a half has derated so much, why the multiple is so much off.
But Mark, is that because of the slowdown in growth in AWS, or is it because of the perception that the second and third place players, because of AI, are catching up from a momentum and profit perspective?
I think it's both. I think you've had this optimization cycle amongst a lot of companies that buy, enterprises that buy cloud services for economic reasons. That slowed down AWS. And then, at the margin, the company that's really impressive here is Microsoft Azure. And I think they caught the beat, or they took a step ahead. They got a little bit ahead of the curve versus AWS. I think AWS is still well positioned. I think this Anthropic investment that they did recently was a super savvy, smart move. I think AWS can fully participate in a reacceleration. So I guess that's really the pitch. And you give them enough time, I think they can kind of steal back and get back to that leading AI position that Microsoft currently has.
Now, Mark, one name that you have liked that has also had a decent pullback over the last few months, but that I don't see on your list of top picks is Netflix. Reports next week. How do you feel about it?
I'm a little more nervous on Netflix right here. This strike that is not ending has two impacts on Netflix. First is that it increases the chance of a content hole. So, those shows that they wanted to pull out, push out in Q4 and in Q1, they probably can't. It gets delayed. The second thing is, I think it delays the timing in which Netflix can pull its next price increase, what they call widen the price range. It's a nice euphemism for increasing prices, but that pushes that off probably until the back half of next year. So in the meantime, you have a little bit of an air pocket on Netflix. I think that's why the stock is pulled back, probably for good reasons. I'd probably want to wait until after the print before becoming a real buyer in Netflix.
All right, we'll get that print right here on Overtime next week. Mark Mahaney, thank you.
Thanks, John.